All right, welcome to Talk Tickers. Today we're diving into the latest earnings from luxury home builder Toll Brothers. And on the surface, this was a fantastic quarter. I mean, they beat expectations across the board. But the market's reaction, well, that was a whole other story. It was complicated. So let's get into it and figure out exactly what happened.
So here's the game plan. We'll kick things off with the Q3 scorecard. Then we'll look at what made it such a strong quarter and dig into their margin over volume strategy. After that, we'll get into the red flags, the stuff that made investors nervous. And we'll wrap it all up with our final verdict in the next call.
All right, Section 1, the Q3 scorecard. So, did they beat or miss? Let's jump right into the big numbers and see how they stacked up. And it was a beat, a really solid one on both fronts, actually. Toll Brothers came in with earnings of $3.73 per share. Now, Wall Street was looking for something around $3.60, so they cleared that hurdle easily. In revenue, came in at almost $2.95 billion, which was also way ahead of what anyone was expecting. So yeah, simply put, a clean sweep on the top and bottom lines. And just to put a finer point on that earnings beat, that $3.73 per share, that's a full 3.6% higher than consensus. Now look, in a market that just dissects every single penny of these reports, that's a pretty big deal. It's a really notable outperformance, and honestly, a clear sign of just how well they executed this quarter. So the big question is, how did they do it? How did they pull off such a strong quarter? Well, the answer really comes down to their core customer. The secret sauce here is that the high-end luxury homebuyer is holding up incredibly well, even when the rest of the market feels a little shaky. I mean, just look at these numbers. The operational details are seriously impressive. Home sales revenue up 6%. Their margins better than they even guided for. And they were super efficient, keeping their costs in check, which is always great to see. But here's the stat that really tells the story. The one that made me go, wow, 26%. More than a quarter of their customers paid in all cash. Think about that. That's some serious financial strength. And the CEO, Douglas Yearley, he really hammered this point home on the earnings call. He said, and I quote, "We are pleased with the resilience of our luxury business and more affluent customer base." That's not just some corporate talking point. That right there is their secret weapon. It's their economic moat. It means their customers just aren't as worried about interest rate volatility as everyone else is. So this resilience we're talking about, it's not an accident. It's actually a direct result of the company's core philosophy, something the management team talked about over and over again on the call. It's what they call their margin over volume strategy. And it really just boils down to one thing: prioritizing profits over pace. So, what does that actually mean? Well, think of it like this. It's a very deliberate choice they're making. Instead of trying to sell the most homes, maybe by throwing in a bunch of discounts and incentives to chase market share, Toll Brothers is focused on making the most money on every single home they sell. It's about quality over quantity. And this really lays out the trade-off perfectly. On one side, you have the Toll Brothers approach, being really disciplined on price to get those higher average selling prices and super strong margins, even if it means selling fewer homes overall. The other path, you chase volume. You use more incentives, you sell more houses, but your profitability takes a hit. Toll Brothers has made it crystal clear which lane they're in. Okay, so let's recap. We've got a huge earnings beat, a crystal clear strategy that's obviously working. You'd think the stock would have shot through the roof, right? Well, it didn't. So now we have to pivot and talk about the other side of the coin. Let's dig into the red flags and figure out what's got the market so spooked. And this right here is the million-dollar question. If the quarter was so good, why on earth did the stock end the day in the red? It's because the market is always looking ahead. It's a forward-looking machine, and it looked past the great results and saw something else, something it did not like one bit. The whole concern really boils down to one critical number: the backlog. Now, the backlog is just the list of signed contracts for homes that haven't been built yet. It's basically the best crystal ball we have for future revenue. And here's the problem. Toll's backlog is shrinking. A lot. The total value is down 10% from last year, and the actual number of homes in that backlog is down a whopping 19%. That drop in future visibility, that's the big flashing red flag for investors. And hey, it wasn't just the backlog. Management's own forecast for the future basically poured a bucket of cold water on these great results. Their Q4 delivery guidance, it came in below what Wall Street wanted to see. They even trimmed their target for the full year. Then you throw in a higher cancellation rate and fewer new contracts getting signed, and suddenly you've got the perfect storm for investor anxiety.
Okay, so we've seen both sides now, right? The good, an absolutely stellar present, and the bad, a much more uncertain future. So let's bring it all home in our final segment, the next call. This is where we give you our official verdict. So here's our prediction for what happens next. Number one, we fully expect Toll Brothers to hit their new, more cautious guidance. They're going to keep focusing on those margins, just like they said. Number two, the stock price. We think it's going to be kind of stuck in a range for a while. You've got this tug of war between great profitability now versus slowing growth tomorrow. And number three, all of this leads us right to our final rating. And that rating is market perform. Look, the company is executing incredibly well. Their margins are best in class, no question. But, and this is a big but, you just can't ignore the warning signs. That slowdown we see in the backlog and in their own guidance, it keeps us from being more bullish. It's really a textbook case of a fantastic company that's just running into a tougher environment. So to wrap this all up, here's the final thought I want to leave you with. Toll Brothers has built this incredible fortress of high margins by focusing on that wealthy luxury buyer. The real question, the one we'll all be watching, is whether that fortress is strong enough to handle what looks like a broader market slowdown coming its way. And of course, please remember, this is not financial advice.